Good morning, good afternoon, good evening to you, wherever you are in the world. Welcome back to another episode of the Coffee Hour. Today, we're going to be going over just a couple clips regarding the software sell-off, the continued software sell-off. Today was a pretty bad day, pretty brutal across most asset classes, except for, of course, commodities, right? Bitcoin also had a pretty nasty dump. We'll be covering all of that and more. We'll be talking about Nvidia and Meta's new deal. All right, we'll be talking a little bit about Palantir. They had a deal also come out last week that kind of went underreported, and I totally missed it. So I wanted to cover it at least in this stream. All right, we'll talk about Amazon's data center build out and their continued investment into the AI trade, and we'll cover just some random news as like we always do. All right. So with that being said, guys, I always appreciate you guys. Thank you for joining this stream. All right. So this is the coffee hour. So let me get my sip of coffee before we get started. And of course, good evening to everyone once again. All right, guys, let's get into this. So first, because we had such a great day in the stock market, I think we should start off with a pretty great video. So we're going to play this.
We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more. We're going to win. We're going to win.
We won so much, guys. We are winning too much. I hope you are tired of winning because I certainly am. Again, we had a nice 1% drop on the stock market, and I had to cover that because I think maybe that's what I'll do from now on. Every time we have these really nasty drops just in the broader market, I'll just play that clip because it is fantastic. From Phil M. Hey, good evening. Well, good evening to you too, sir. All right. Thank you for joining. Still getting over this cough. Okay, so you guys can see here that consumer defensive is still doing really, really well. All right, we're having a continued sell-off in the software services, okay? That whole piece that we covered last week from Anthropic, coming out with their own, kind of feature where they can validate, code and then apply vulnerabilities to it or identify vulnerabilities. Not apply vulnerabilities, apply patches, but identify vulnerabilities. That has really been driving the software sell-off because Anthropic coming out with that new tool, it's basically these companies are fighting now against AI. Their moats have come into question. If Claude or Anthropic or OpenAI can do a lot of what these, companies can do themselves, then what's the point of having and paying these crazy fees or these crazy subscription models to these other companies when, Claude or OpenAI's ChatGPT can do it, right? Or even Gemini in the future. So we still had a pretty bad sell-off again there. Hardware sell-off, pretty decent as well. It looks like everything just did not do well today. I'm surprised Nvidia is actually up. All right, so Nvidia was up, but Broadcom is down, Micron is down. We had Microsoft getting hit, Oracle, of course, getting hit, Palantir getting smacked, Apple up slightly, Amazon, Google selling off, Tesla, Meta selling off, financial services obviously getting wrecked over here. But again, you're looking at the other sectors, and this is probably continuing of the great sector rotation. You have healthcare doing very well, consumer defensive doing very well, energy, oil and gas doing well. Real estate looks like it's coming back from the dead. All right. Real estate looks like it's definitely coming back from the dead, although, we still need to wait. This is just the specialty real estate. You have data centers mixed up in here. You have some cell towers as well. But yeah, it looks like real estate's coming back. And then we have utilities. All right. These are all real assets, utilities, real estate, energy. Okay. So again, the great sector rotation does seem to continue on its trend. So I see Super Straight Guy. I am back like a side. Well, welcome back, sir. All right. Going to the S&P 500, pretty brutal sell-off today, okay? About a percentage down. Again, just looking over year to date. Back in the red, okay? Back in the red. There's these really crazy swings right here. This market is just absolutely insane. I mean, look how choppy this thing is, and it's going to continue that way. I totally forgot to get it, and I meant to get it before the start of this stream, but the Buffett indicator is pretty high. Buffett's Berkshire Hathaway is holding an obscene amount of cash. I think it's like, a couple of $100 billion worth of cash. And Bank of America also came out with their own, bullish, bearish sentiment or report. And they're predicting a pretty massive correction coming up in the next couple of months. Of course, they can't tell you down to the day, but if the Buffett indicator is any telltale sign or any signal at all, then there is a strong potential that we're going to have something happen. All right, there's still a lot of talk out there of a between 10 to 15% correction. 20% would be really, really not good. I don't even know how to finish that. It would not be ideal. We will see a really massive sell-off if that 20% hits either the Qs or the broader stock market, like an S&P 500. We still do have some fallout from the speaking of which, we still do have some fallout from the taco event. All right, from Trump, fighting the good fight to get tariffs back up for his agenda, for his administration's, basically centerpiece for this whole thing, right, is the tariff. And the tariff debacle is still going on. Looking at alternate ways to basically get the tariffs implemented. There's some pundits out there saying that this is going to continue to be illegal, but now you have to wait a whole nother year for this to play out, right? So we will all see what ends up coming of these tariffs. It doesn't seem like he's giving up on them, and it doesn't seem like the countries. As a matter of fact, funny part, China came out and said publicly, right? Their government said, the tariffs are illegal. We should continue business basically as is, right? Before the tariffs, right? You should listen to the Supreme Court. They must be absolutely loving this right now because, again, they were in this big, and remember, the tariff debacle with China still has not concluded. All right. That still hasn't come to a conclusion. There was still a lot of stuff left open. And now that the SCOTUS, the Supreme Court of the United States, basically overturned those tariffs as illegal under IEEPA, now he's saying now the Trump administration has to look for alternate ways, but you have the Chinese government saying you should listen to the Supreme Court. So we'll see what comes of this. This is all really interesting stuff. Still getting over my cough, guys. I am not sick, so not contagious. All right, so just wanted to cover that piece because it's still going to be lingering around for the next year, right? We had the iShares IGV expanded tech software continue to sell off, down almost 5% today. This is bad. Like, this is really, really bad. Okay, year to date down 25%. If we look over the last 6 months from its previous high, we could probably take October and we scroll all the way down. It's down 34%, almost 35%. It is absolutely brutal what's happening in SaaS apocalypse or the disaster, whatever you want to call it. Let's see. So we have what's up, Oak? Sub Huge, can you give your opinion on SoFi stock? $18 now. I was buying at 25. Would you buy more? I don't follow SoFi, to be honest. I know SoFi, they're not like Robinhood. They make money off of like loan originations, mortgages. They make money off of a couple other different ways. So aside from personal loans, they had like auto loans. I think they have a bunch of like products with SoFi, but I don't personally use SoFi. I've never covered the company, to be honest. I've probably covered their earnings, maybe an article here and there, but I don't know what the appeal of SoFi is personally. There is a huge community out there for SoFi, and people do follow the stock religiously, but me, I am not one of them. So I really could not give you an opinion one way or the other. I would say, if you're extremely bullish, again, if you have conviction, what is that conviction? What's the thesis for SoFi? If you really like the stock at 25, then there should be no question why you wouldn't like it at 18. But of course, be very careful because, as the saying goes, I bought the dip and it just kept on dipping. So be very careful, of course, right? But those are pretty much my thoughts on SoFi. All right, just moving on. Again, expanded tech software is continuing to sell off. Gold, we had a nice little pump today, up 2.7%. Again, I like gold. I'm in gold. And again, there's still a lot of uncertainty going on, especially south of the border, especially in the Middle East. Okay, so you have, a little bit of cartel and government, action happening in Mexico. The clips are all over YouTube. The clips are all over X, right? It's pretty brutal what was happening there as of yesterday. I don't know if it's continued into today, but you have the Mexican National Guard and the Army being deployed to those areas, to those hot spots. So it is going to be, it's not good, right? Especially since it's going to be on the border of the United States. I'm I'm not going to get too much into that type of policy or that type of politics because it can get pretty murky really quick. But of course, whenever there's uncertainty, wars, geopolitics in the broader scope of things, gold usually does well, right? When we still have Iran, that whole thing is about to pop off probably soon. The Trump administration, there was a lot of chatter that there could be potential strikes either today, tomorrow, probably tonight. He said 14 days. I wouldn't put it past him that he's not going to give Iran 14 days to negotiate, because that's going to give them 14 more days to basically, get their defenses up, right? So whenever there's uncertainty and geopolitical risk, gold will do well, right? Gold is continuing to go up. All right, we look at year to date, best performing asset, all right, up 20%, okay? Silver is actually having a pretty good day too. Silver is up 5.16%, all right? And year to date, up 22.54%, even though it had this really massive drop, right? This really bad drop. It looks like it's starting to come back again, all right? It looks like there's some life coming back to it. It looks like some investors are starting to buy in. Again, this period was probably a consolidation period. Got the paper hands out, erased a lot of the longs, got the people who are in leverage, got them all out. And now silver can finally probably get back on its track to run up. All right. If you guys don't remember the fundamentals for silver, I talk about it every stream, but there's a insatiable demand for silver, not enough silver. Okay. Not enough silver out there in the world. A couple YouTubers you guys can look at if you're interested in digging deeper on silver. You can look at Rick Rule. All right. He's one of them. There's also Robert Friedland. Okay. Robert Friedland, he talks about silver as well. He also talks about copper, and copper, of course. Maybe I'll start covering copper as part of the stream. As far as the lineup of ETFs out there, we can see kind of the daily price action. I think that'll be important. Again, I'm bullish on copper. I do hold a copper miner ETF, and I think that demand is going to start to spike here sooner rather than later. All right. Moving on. We had Bitcoin. We had a really, really bad drop, guys. All right. Bad drop for Bitcoin. It was just hovering, and then all of a sudden, Trump, I think, tweeted something. He said, we're winning too much, right? Legitimately on X, he posted this. He said we're winning, and then Bitcoin just sold off right after the fact. If I could pull up that screenshot in the Discord, let me see if I can find it. But yeah, he did post that, and then the stock market sold off. So here it is, right here. Let's see if I can pull it up here. Oh, boo! What is that? Hold up, nonsense. Open link. Open in browser. There we go. Yeah, there it is right there. So he had posted, we're winning too much. It's just not fair. And then that is right when Bitcoin sold off, right? So I don't know about you guys, but I'm really tired of all this winning. I'd rather start losing now at this point, because it seems like every time we're winning, we're really just going down, right? We're really just going down. But that's what happened with Bitcoin. All right. That was the biggest news for Bitcoin. A lot of people are posting about it. Of course, the FUD's coming out. We're going down to 13,000 a coin, $15,000 a coin. I don't know what the real answer is. I do still think that we are headed again for the mid 50s, $55,000, $58,000 level. Is that going to be playing out soon? It doesn't look like right now. We're going to be breaching that 70K, right? We talked about this in other streams that we have to breach that 72K in order to continue higher. It does not look like we're going to be doing that. So it looks like the bears are in control, all right? And the sell-off continues. So we hold on for dear life if you are a Bitcoin hodler, all right? I see from Screeching Possum, we're winning too much, refers to all of us buying these blocks and BTCI dips. Hey, man, that's all I'm talking about. I don't know why people were like selling out of blocks in droves. Like, they're like scared like the ETF is gonna go to zero. It's not gonna go to zero, right? And of course we know why it's going down, right? The whole crypto industry is going down at the moment, but it doesn't mean that it's gonna be like that forever. But again, people, in general, they have like the memory of a goldfish, right? 3-second memory. They buy it when it's going up, it looks great. And then as soon as it starts to go down, they forget why they buy it. And then they start selling out. We have Sergio in the chat. Hey, welcome. All right. First biggest piece of news up. All right. And the FedEx is going to sue the United States for a full refund of the Trump tariffs days after the Supreme Court ruling. I'm not going to get too in depth on this or go through the entire article. You guys can check it out for yourself. But basically the net of this is that FedEx was waiting for something like this, and now they're going to get that refund, right? Because right now the Supreme Court, they didn't want to really commentate or add any type of what their thoughts were about how to deal with the refunds, right? That's pretty much getting sent down to the lower courts to handle. The Trump administration does not want to give refunds, of course. But, looking at it from an optics perspective, just from a U.S. consumer, a regular Joe Schmo, average investor, or average American, I'd be pretty pissed about this, because you had companies like FedEx, right? Or any of these companies that had to pay the tariffs, right? They paid the tariffs, they hiked up the prices. You and I had to pay those prices, right? And now they're going to get a full refund. It's like they double dipped. That's what it was. They're double dipped. They're going to get so much money from this if the refunds happen. And this should piss off anybody. And now the whole tariff thing is back on the table. You have midterms coming up in America. This is not good. This is going to be for the Senate, right? You don't want to lose the Senate and the Senate to flip blue, right? From a Reds perspective, you don't want that. But this is going to be a huge pain point going forward, in my opinion, right? Companies are going to want their refunds for all that tariff nonsense. So we're going to see what happens. All right. We're going to continue monitoring the situation, as it were, and just see what happens with these refunds. Keep an eye out for the courts, right? Because this is a big deal. And again, looking at, again, I don't want to get into domestic politics, but again, looking at this from the lens of an investor, this is just going to add a little more volatility, right? I still think, the market probably absorbed this already. There wasn't really a sharp sell-off, not a sharp or a sharp, pump up. It was more or less, this is like, okay, they digested it over the weekend. It's priced in, it's whatever. We got to wait to see what's going to happen with the refunds, but also what's going to happen with other tariffs. So now you have the Trump administration looking at additional methods to incorporate tariffs, right? So again, this is going to continue to be messy for the remainder of this year, but I think the market is really just getting kind of tired of it. I know I am, right? We spent all of last year covering tariffs, talking about tariffs, getting sold, getting liquidated because of tariffs. And now, when everything was all said and done, except for China, right? When everything was all said and done, deals have been made. We can move past this. It's already priced in, baked in. All these companies understand what the rules are. Now it's, no, we're going to change the rules again. Now the tariffs are off the table. They're illegal. And now you have the Trump administration looking for alternate ways, right? But again, this is going to be another legal battle for another year, right? Another full year. And that's just going to add to the unknowns for a lot of these companies, right? For a lot of these companies that have to pay tariffs, that have to deal with tariffs, that's just going to add more unknowns, more uncertainty. So just my thoughts on all of that, guys. Of course, everyone is entitled to their own opinions. But I think, again, this year is just going to be stupid. It's going to be stupid. Cybersecurity stock dropped for a tool fuels AI disruption fears. All right, we covered this. We saw a lot of names get sold off, and they're continuing to get sold off. Okay, so just real quick, right here, you have CrowdStrike, Zscaler dropped about 10% on Monday, while Netscope and Tenable plummeted about 12%. SailPoint 9%, Okta 6%, Sentinel-1, Fortinet each lost about 4%. Palo Alto down 3%. Cloudflare, which benefited from the recent Vault enthusiasm, dropped over 9%. All right. The iShares cybersecurity and tech ETF dropped about 5%. Okay. And Global X cybersecurity ETF dropped or fell to its lowest level since November of 2023. There was a new ETF that came out that was all the rage, right? That was all the rage just a day ago. And that was Hacky, right? That was Hacky from Amplify. This brand new ETF that just dropped, and it had a very delicious drop. I don't know how to say that. It was bad, right? This is, you could not have timed this like worse, right? You could not have timed this worse. But this just shows the impact of AI on all trades. It's not just impacting, the job markets for, like industrial warehouses. Now it's bleeding into software, right? It's bleeding into software. It's going to start replacing software developers. It's bleeding into cybersecurity, which is a huge industry, right? It's bleeding into cybersecurity. These AI models can start to do those things that these people pay millions of dollars for, right? The software that these people pay millions of dollars for. So now you're having artificial intelligence disrupt a lot of that. You're having artificial intelligence disrupt a lot of industries. And it's not just I hate to say it this way, but the low line, like Amazon worker, like they're not the only ones impacted by this. You have 6-figure, software developers also getting laid off because their skills, they could just have an AI do it all for them. So it's just getting really, really dumb. Let's see. So was actually thinking of selling my hacky, but the dip does look good. I wish you the best of luck, Screechy Possum. But me personally, I'm staying away from the cybersecurity stocks for now. I'm fine holding Palantir. I mean, Palantir is not a cybersecurity company, but I'm fine staying away from I guess a sector that's being disrupted by AI right now. Could it come back? We have to see what the moats look like, right? We have to see what Anthropic is really coming out with, or what these other AI models are coming out with this. Because the biggest moat for a lot of these software companies, right? If we look here, let's see. I guess we could probably use this. Like what is the moat for the cybersecurity companies, right? That's really what you're looking at. For CrowdStrike, it's their software. They can deploy and identify vulnerabilities. They can deploy patches for that on a global scale, right? They have what's known as a RMM, or a remote management something. I forget what the RMM stands for, but basically it's a piece of software on every device within an enterprise environment. So like, let's pretend ABC company has, 70 offices across the globe and then 15,000 computers, right? CrowdStrike can actually monitor the network, monitor those PCs, make sure that there's infrastructure or that there's security patches applied, look for vulnerabilities, and so on and so forth, right? But if you can have something like Anthropic, right, come out with a feature that can do all of that anyways, then what's the moat for CrowdStrike, right? And I'm using a very surface level example. I know CrowdStrike has a ton of other products. It's not something I'm well versed in. I never use CrowdStrike personally, but I'm familiar at least at a high level with the software or the security software. But again, now it's going to start. You're going to have AI start to impact other layers out here, right? It's coming for sure. So to help us understand this a little bit more, we're going to listen in on this CNBC clip right here. It's about 5 minutes. So we'll just listen in, and this is talking about navigating the software sell-off, right? What's happening in software. So let's listen in here.
Salesforce, Snowflake, a few other software names falling sharply to start the week again as AI disruption fears pummel the sector. Deirdre Bosa has more on the SaaS apocalypse in today's Tech Check. Did you coin that?
I think it was a Wall Street brokerage, but it came a few weeks ago. And look, we're still talking about it. We're probably going to talk about it for a while because some of the biggest names in software, they're gearing up to report this week. And the question for them is simple. Can any of them say something, anything to change the narrative here? Because right now, even winning is not enough. ServiceNow and Palantir have already reported, both showing real traction, yet investors, they aren't buying it. Look at the direction of their stock prices since reporting. And then there was another piece over the weekend from a popular investment newsletter titled The 2028 Global Intelligence Crisis. It is adding more fuel to the fire. Now, this is a thought experiment that plays out what happens if AI works so well that it hollows out the white-collar economy. It's going viral because it puts a name on what the software sell-off is already pricing in. Now, this week may be software's biggest test yet. You've got Salesforce on Wednesday, the bellwether for enterprise software, Snowflake the same day, and then Workday tomorrow night, the back-office giant that has to answer whether HR and finance software survives when AI can automate those workflows directly. There's a chart circulating from Goldman Sachs that might explain why investors are nervous even when the numbers look fine. It shows newspaper stocks from 2002 to 2009. As they fell, earnings held up and the business looked okay until all of a sudden it was not. Now the market saw internet disruption coming and priced it in years before the P&L confirmed it. So the worry is that software is in the same pattern right now. Earnings, they're still holding. We may see that this week, but the stocks are in free fall, and the market may be pricing in a world where AI agents are doing the work that software was built to help humans do. And guys, that is now what's hitting those cybersecurity stocks. Not that anyone is replacing CrowdStrike in a single prompt, as George Kurtz posted about, but when agents can write and they can deploy code, they can also scan and patch it. Companies reporting this week, they're going to have to show that they're not the thing being disrupted, rather, they're the thing doing the disruption. And that is a difficult thing to do in this environment, guys.
Yeah, I love that element about the delay, the lag, because B of A last week had a chart of Blockbuster and Netflix. When Netflix came around, it took 8 years for Blockbuster to essentially go away. And as for that Substack you mentioned, the Citrini research piece, which is now making the rounds, I mean, their argument, D, is that software is the opening act, and the same calculus that would push a service now to cut headcount could apply to any company with a white-collar workforce.
Right, and then you think about security, cybersecurity, and this has been talked about as one of the most difficult industries to disrupt. You could also talk about legal and healthcare. There's really zero tolerance in these industries, and what a lot of folks are saying is that they are not going to be replaced tomorrow. That is absolutely true, but I mean, it's getting easier to envision a future like this Citrini note does, in which the technology gets better, right? Like right now, the technology is the worst it's going to be. So you're not going to create something with one prompt, but a year from now, 6 months from now, can you recreate a prototype in a few prompts, 100 prompts? I mean, that's where this starts to get really complicated, and that is what the market is pricing in.
Yes, but you use the newspaper example, right? You said that was the parallel. I mean, look at the New York Times. Pull up a long-term chart of that stock. That would have been a huge buy.
Okay. All right. So disruption is coming to software. Disruption is coming to cybersecurity. Disruption is coming to everything, right? This is AI disruption that is coming eventually. Right now, you need additional software in order to make an AI click a button, right? At some point, the artificial intelligence will be able to click buttons by itself natively, right? You won't need to have a secondary piece of software or something else, right? It'll just be able to click a button. It'll be able to run something. It'll be able to actually do something and think about the output that it put out. And that's what is scaring a lot of these software companies, right? Imagine accounting firms, right? Imagine accounting firms, the white collar jobs, they can also get impacted, obviously, by artificial intelligence. But what about the software that runs those accounting firms, right? There's several software suites out there that help them, do the numbers and everything else. What if artificial intelligence can scan through, just lump sums of data, right? Excel sheets, PDFs, and things like that, and then spit out exactly what it needs to do, right? Whatever it needs to show. That it's, doing its accounting and stuff like that, right? Sorry if my thoughts are not there. I'm like half awake right now. But anyways, you guys get what I'm trying to say. Like, AI disruption is coming. All right. It's going to continue to hit other industries, other sectors. Stock market is not going to be safe from any of this. And right now, there is a big reason for the software sell-off, right? Investors are wary, or they're very scared of this, right? What's the point of paying a big premium on a stock like a CrowdStrike or these security companies when you have, again, a private company like Anthropic who hopes to IPO later the year, that has software, i.e. the AI, that can do all of this anyways. So more to come from that, and something I think we should just keep an eye on, because artificial intelligence is going to be disrupting a lot of industries. All right. And it's not just physical AI. It's not just robotics. It's not just going to be on a smartphone where it can answer a bunch of queries, right? It's going to be in everyday life, right? And that's, again, the reason for this massive push for data center build outs. All right. Just a little bit more on software disruption and earnings, because this is going to start impacting software companies in the future. So let's listen in on this.
Brings us more in today's Tech Check. Deirdre, welcome.
Hi, it's the discourse, right? It feels like we're getting these pieces that a very quick pace, but that one over the weekend, it comes from a popular investment newsletter, and it's titled The 2028 Global Intelligence Crisis. This is a thought experiment that plays out what happens if AI works so well that it hollows out the white-collar economy. And it's going viral because it puts a name on what the software sell-off is already pricing in. Now, this week may be the biggest test yet. You've got Salesforce, Snowflake, Workday, big names in the SaaS sell-off. They're going to be reporting, and they're going to have to answer how their models survive when AI can automate their workflows directly. Now, it may not matter. ServiceNow and Palantir, they reported quarters over the last few weeks that did show real traction and resilience, but investors, they just didn't buy it. They have continued to sell them off along with the rest of the space. Now, Kelly, there's a chart circulating from Goldman Sachs that might...
We kind of already listened to this, so this is not a new video. Okay, all right, well, we can X that out. So moving on from our AI kind of centric, disrupting software kind of segment, and we're going to move into just some broader market stuff. We had Fed Waller, make some comments. So we just wanted to listen in on what that has to do. Again, he's going over the tariff stuff, that the debacle that's happening, and what it could mean for possible rate cuts in the future. All right, so again, let's listen in.
Steve, can you fix it for us? Steve Leisman has some comments from Federal Reserve Governor Christopher Waller. Steve, what is it?
It depends on what you think is broken, Joe, but I can tell you that Fed Governor Chris Waller is on the fence about a March hike or a pause. He says data.
A rate hike or a pause, okay? I don't know if he meant to say a rate hike. I think he meant to say a rate cut, but a rate hike, we talked about the Fed, their last minutes, they didn't want to take rate hikes off the table, right? They included, the possibility of rate hikes, or at least, the idea of rate hikes in the future, just to have, just keep that in the conversation, right? And again, the Fed is looking at two major things. One is obviously inflation, but the other is the labor market. All right, so let's continue listening in.
Showing an improving labor market, but that may tilt his view toward a pause, but there could be an equal argument for cutting if job weakness continues. Big question about whether January was signal or noise, that stronger jobs report. On tariffs, he says the Supreme Court ruling on tariffs, quote, may have a positive impact on spending and investment, but it's unclear how large. He says there's considerable uncertainty to what extent tariffs will continue and how businesses react. He's going to look through tariff effects on inflation, as he has done, if the tariffs go up or they go down. The SCOTUS ruling, he says, is unlikely to have a significant impact on policy. Getting back to this January report, he has concerns that the January report may contain more noise than signal. He points out that job growth was concentrated in a few sectors, and you get a typical downward revision to January, also along with the idea that there was almost no job growth in 2025. 1 month of good news, he says, is not a trend. And he goes on to say that a strong February jobs report would support the pause, but it could be appropriate to cut if February jobs are weak. And basically, it's a 50-50 probability. Point out, Joe, Waller dissented in January along with Governor Myron. And I'm looking here at the March probabilities, Joe, and they really haven't changed since this news broke. Still at just a 1.2 percentage point probability of a rate cut in the futures market.
Yeah.
All right. So not a really good, not a really good bet for future rate cuts. Again, they're waiting and seeing. The January jobs data could just be noise. Again, the last couple of readings we got out, there was some analysts that were saying that the numbers looked kind of odd, right? That the numbers looked odd and that the data could be compromised or fake. So the market did not like that. And of course, the market sold off. And here we are today, right? Getting more and more data, right? Because why would the government lie to us? So this is from the CME group, right? This is a Fed watch tool. They basically, ask market participants to bet on what the rate cuts are going to be, right? So in March, it looks like a 95% chance that they're just going to keep rates steady, okay, with a very, very low 4.5% for a possible rate cut. Again, if we're looking at if we're looking further, right, after, Jerome Powell gets taken out, see, this changed as well. So June, is this June? This is June. Yeah. So June, what's going on here? This is just showing March. Hold on, I got to refresh. But people are waiting for Jerome Powell to get, to move on from the Federal Reserve, and for the new Federal Reserve chairman to get in the seat, right? Come on. Kevin Warsh is his name, in case you guys forgot. I think my internet's dying. Come on. I see we have Skeptic in the chat, and he's giving us the skeptical emoji, right? The thinking emoji. All right. I think the Fed Watch tool might be broken today. All right. Anyways, we'll just move on. But yes, the last time we looked at this Fed Watch tool, it looked like the chances for a rate cut increased once we got closer to about June timeframe and after that, right? It looks like the possibilities for rate cuts. You still have Goldman Sachs that's predicting or forecasting at least 3 rate cuts this year. So will we get those rate cuts? Left to be seen, and definitely hopeful we do get those rate cuts, because the Trump administration is pushing very hard to get rates basically near to zero. But on the opposite end of that spectrum, even if we were to get rates down, you're going to have the potential for inflation coming back, right? There is still that potential for inflation to come back. We still have quantitative easing that's supposed to happen, right? We're supposed to have this gradual big print is what they're calling it, the big print, which is, quantitative easing, meaning that a bunch of money is going to flood into the market. We're going to have the M2 money supply basically go up and to the right, and it won't be a good up and to the right. That's not what we want to see. But this would be bullish for equities. This would be bullish for gold, because, inflation is not good for fiat currencies. This is how gold would do really, really well. All right. And equities as well, because equities will be able to keep or maintain their purchasing power, right? That's what makes the stock market very, very attractive. And, again, unfortunately, the people who are going to be are going to miss the boat are people who are not going to be investing, right? Or people who are putting their money into a savings account or hiding it under their bed or in a sock, right? Those people are going to get absolutely crushed. There will be the people who, invest their money wisely, put it into something as simple as like an S&P 500 index or whatever. They will see at least some type of compounded return. So let's see. Just want to check. Comic Book says the Fed should be replaced by AI. You know what? That would be actually a pretty good thing. I don't want to get my conspiracy hat on, but if you guys look again at the Project 2025, one of the big bullet items is that they want to eliminate the Fed. Basically, they want to just get rid of it. If they're able to accomplish this in the next couple of years, left to be seen. But it was one of the bullet items that they did have in there, right? Or they wanted to reduce the power of the Fed. They wanted to get rid of its dual mandate, right? Price stability and employment. So we'll see if that actually comes true. Let's see. We also have Oak says you can't eliminate too many jobs and still expect people to buy your products. The same people you replace AI with are the same people who buy your stuff. Just saying everything works out. That's true. That's true. Skeptic says new channel name, the Eugene the Conspiracist. Yeah. Hey guys, I'm just saying, man, check that Project 2025 document. They've been following it to a T. I covered it actually in my video, why I'm bullish on Palantir. I covered it in that video. You guys should check out that website because it's been steadily moving all the progress bars that they have listed, right? Which are basically objectives within Project 2025. They've all been slowly moving to the right. Some of these objectives have reached 100%. It is fascinating. I'm not saying I'm for it, all right, or against it. I could care less. I'm just saying that is there. And if you wanted to know the playbook of this administration, you don't have to look very far. It's right there. So, all right, moving on, guys. Palantir landed its $1 billion deal. This is a big, big deal. All right. So Palantir last week announced it. Didn't really get a whole lot of airtime. I don't even think I saw it until Sunday night, right? I didn't really think about it or, to see an article about it. But Palantir struck a groundbreaking 5-year agreement with the Department of Homeland Security. All right, the most hated organization right now in America. The $1 billion software deal dramatically expands the relationship between the pair, Palantir and the DHS. It serves as a stark reminder that while its enterprise business is growing quickly, Palantir's commercial business, its government business can still take big swings. All right, and as far as last I heard, DHS has not been funded yet. It's still going through that weird thing in the House where they have to basically get funding for it. So I haven't seen if that had completed or not. So I'm actually surprised that Palantir was able to announce this deal. So that kind of tells me maybe the deal happened before the closing or something. But anyways, Palantir has been the one undisputed beneficiaries of the sweeping adoption of artificial intelligence thanks to its cutting edge data mining capabilities. Most of the focus has been on the company's commercial business and artificial intelligence platform, which has been the biggest driver of Palantir's recent growth spurt. However, its government contracts are back in the spotlight this week as the company struck its next major deal. All right. Reports emerged Thursday that Palantir landed a $1 billion software purchase agreement with the Department of Homeland Security, which also includes CBP and ICE, right? Just to name two of the organizations within DHS. All right, so this is a huge deal, especially for Palantir. I hold PLTW from Round Hill. It's basically a proxy or some type of exposure to Palantir itself. And I'm bullish on Palantir even now, even though that the software company has sold off really badly. I think it's down 35%, if I'm not mistaken. I think it might even be more now. Let's check real fast. But yeah, Palantir has just been getting slaughtered, even though it's a kind of identified as like an AI company or a benefactor of AI. It's still getting sold off, right, with the rest. And Palantir has some controversy with it right now, so it's down 37%, right, from its former high. So some of the controversy surrounding Palantir right now is a lot of its former executives and people who left Palantir are starting up a new company called Percepta, right? So Percepta does almost something exactly the same as Palantir. They basically, poached a bunch of Palantir software engineers and executives and started up this company called Percepta. Palantir has, taken this to court and said Percepta can't be poaching its employees, etc. And as a matter of fact, I saw an article stating that a court has approved or granted that Percepta may not use former ex-Palantir employees, right? I haven't read the entire article. I didn't even get to the entire article, but I saw the headline. So again, Palantir is protecting its moat. It's protecting it through, obviously the legal system. Percepta is not a public company. It is a private company. But if it was to go public or IPO in the future, it would have I think it would have probably a pretty good chance against, something like a Palantir as far as, making it to market and then getting a bunch of, hype around it. But I would still be bullish on Palantir. I mean, you're betting on not just the company or the software or the technology itself, the orchestration technology that Palantir has, but you're also betting on the CEO. So, Alex Karp is the CEO of Palantir. And I mean, if you guys have seen this guy, speak on earnings calls or just out in general, speaking on interviews or as keynotes, I mean, he's a very outspoken person. He does not hold back. And to me, that means a lot, especially for a founder, especially for, a CEO who's running a company, right? Because that's just, something I identify with, so I'm happy to invest in something like a Palantir. Even though, I know it's not a very popular company for a lot of reasons, right? It's very controversial. But me being, who I am and some of my beliefs, don't bet against America. I'm happy to have Palantir in my portfolio for those reasons, right? So wanted to cover that. Now, Nvidia also had some big news here, right? Nvidia and Meta, they inked a deal, and basically Meta is no longer going to be using or relying on Intel's CPUs. So this is a big blow to Intel. Intel, if you guys don't know, they're not in the AI trade, right? They don't have AI chips, right? They don't produce anything really for AI, but they have a big foundry, right? They have a big foundry that can produce a lot of chips, right? Their bread and butter has been computer-based CPUs, right? So the CPU that is in every laptop, in every desktop, a lot of servers and a lot of data centers, that was their bread and butter, was the CPU. But now you have Nvidia saying, hey, we can also make CPUs, right? So they inked a deal with Meta to basically cut out Intel. And this is, in my opinion, a really big deal, especially for people who are getting into Intel, right? Or who are excited for Intel. Nvidia, and this is bullish for Nvidia as well, because now they're able to take more market share away from the likes of, Intel, right? Or even AMD. AMD, they do have their own server-based, CPUs, but they've been really focused on this push for GPUs because of, the whole push for artificial intelligence, AI and data centers and that sort of stuff. But now you have NVIDIA that's like, hey, we can also do CPUs too. All right. So NVIDIA has expanded its partnership with Meta to supply data center CPUs and GPUs, moving directly into Intel's core CPU territory. The deal positions NVIDIA as a large supplier for Meta's AI and cloud infrastructure, an area where Intel has historically been a key CPU provider. This development arrives as Intel is working through supply constraints and investing heavily in manufacturing and internal turnaround efforts. We all know the story with Intel, right? Not too long ago, seems like yesteryear, the stock was pretty much dead. Right? The stock was pretty much dead. The company was pretty much going in the toilet can, right? And then you had the CEO, the new CEO, come aboard, Lip-Bu Tan. So he came into the scene, and he's immediately started having beef with the Trump administration, right? And then you had Trump come out and basically say that, hey, this CEO for Intel has links to China. Intel's board needs to get rid of him. And then it went dark for like a week, and then a deal came out, right? That the Trump administration is taking a 10% stake in Intel. And then we saw Intel just fly, right? We saw Intel stock price recover. There was a use case that, hey, they have all these, all this manufacturing capability. Why not just have them build other CPUs, right? Or other GPUs or whatever? Why not use the space that they're not really using to do that? So that was one bull case that got thrown out the window. Intel said, we're not going to be doing that. We're focusing on our own products and services. But here you have NVIDIA coming out of left field and say, hey, Intel, we see that you guys got a pretty decent market share for the CPUs for the server game. We're also going to hop in there, right? So this, in my opinion, is bullish for NVIDIA. That's why we still haven't seen NVIDIA really sell off. I mean, you look at NVIDIA stock, like you can't have AI without NVIDIA. And if we're looking at NVIDIA for the 1 year, like look at this, pretty much flat. Like it hasn't really done much. It hasn't really gone anywhere. It's hard to take this damn company down. It just will not go down, right? And I've been waiting for a really nice dip because I want to increase my NVIDIA NVDW from Round Hill. I want to increase my position in this, but it's just it refuses to go down. But for good reason, right? For really good reason. This company NVIDIA is just a behemoth in the AI trade. They have deals with OpenAI. They have deals with everybody, right? They have deals with everyone. And there's a demand for NVIDIA's Blackwell series chips and for their new series chips, the Vera Rubin that's coming out, or the Rubin chip that's coming out, right? You still have sovereign AI. You still have data centers being built in Europe and the Middle East. And what do you think they're using, right? What do you think the premier chips they're going to use? They're going to be using NVIDIA. Okay. So that is just a fact. AMD is also in there. Don't get me wrong. I'm sure Cerebras is somewhere in the mix, but it's primarily going to be NVIDIA. So I'm bullish on NVIDIA for these reasons. All right. Just want to cover this because this is really breaking news. This is huge. All right. And when we're talking about the AI trade and the rivalry between the United States and, China, when it comes to artificial intelligence, this is the new Cold War. Now look at what is coming out, what just came out. And this happened to both Anthropic and OpenAI. Okay. Anthropic accuses Chinese companies of siphoning data from Claude, per the Wall Street Journal. The accusations include Anthropic says DeepSeek, Moonshot AI, and Minimax set up fraudulent accounts on Claude. These companies prompted Claude more than 16 million times to train and improve their own models. Anthropic says more than 24,000 fraudulent accounts were used. OpenAI sent a memo to the U.S. House accusing DeepSeek of the same tactics. Okay, the AI arms race is heating up. Guys, you don't need, I keep saying this, that China cannot innovate like the United States can. They usually end up stealing everything, right? This has been my belief for as long as I've covered like geopolitics for myself, right? It's just China has to copy. They have to copy. They have to steal, right? We saw this a lot in the defense industry where you had massive cyber attacks and basically cyber breaches on a lot of, U.S. defense contractors. Okay, Raytheon, Lockheed Martin, General Dynamics. You had just a bunch of these companies getting breached like crazy, left and right. And they were all that data that was stolen was siphoned to China. okay? Because China can't innovate. They just can't. They have to steal, right? But this is just further proof that, the rivalry between the two countries is definitely heating up and is getting crazier. You're having artificial intelligence wage basically some type of war against another AI, right? Basically stealing, or prompting other AIs to get data from, right? So it's kind of cutting your research in half. I don't know what to think of this, right? This is obviously really big news, especially if you're following the AI trade, because again, you're looking at this, and what comes to your mind is if AI can attack other AIs, what's the next step, right? What's the next step for AI companies to use AI to attack networks, to start attacking data centers, to start attacking or launching? Because back then, or still relevant to these days, you can do what's known as a DDoS attack, a denial of service attack, right? So you basically just ping the internet, right? You're pinging a service provider, internet service provider to death, right? And it clogs up the firewall, clogs up the routers. You could bring down networks that way, right? You could just have the router completely reset because of too many requests. Is that going to be the next step, right? Is it just going to be AIs versus AIs? You're going to have AI defense, something from like Anthropic, with their security features, and versus like an offensive capability from DeepSeek, right? Or Moonshot AI or Minimax, right? So these things are starting to heat up. It's getting pretty crazy out there. What does this mean for the stock market, right? What does this all mean for the stock market? I have not a clue, to be upfront. Like, I don't know if it's good, bullish, bad, whatever. But I think this warrants something to monitor, especially for the future, right? Especially if, we're talking about artificial intelligence and what it can do and what these LLMs can do. I think it's prudent to understand that for the broader scope of things, right? Not just for the stock market, but for the broader picture. All right. So I just wanted to share this. I think this is insane that you can have artificial intelligence basically prompt another AI and then steal that information, right? Somehow, some way. Prompt it, hey, maybe how are you coded? How does it all work? Where are you getting your data sources from? What's the language learning model, structure, all that stuff. And they're basically taking all of that and then implementing it in DeepSeek, Moonshot AI, Minimax. So absolutely crazy. And just for context, referencing my earlier point about, Chinese companies committing basically or espionage. One other country, North Korea, they were successful in this, especially with defense contractors. During COVID, you had a lot of companies remote hiring, right? There was, with AI now, you can fake a driver's license, a passport, you can fake a lot of stuff, right? You can fake like official documents. When COVID was going on, there was a lot of remote hiring. And during that time, all right, some of these defense contractors hired North Korean nationals, but they had US aliases, right? Same thing for China. A lot of these defense contractors hired Chinese nationals, but they were, they were using fake credentials, right? They were even able to get on calls and have, the voiceover and everything. They speak perfect English, the accents and everything, right? So again, that stuff is real and that is happening out there. So just, my thing is just don't be ignorant to it and understand that stuff is happening. That's my whole point on this, at least, piece right here. It is pretty alarming in my opinion. Okay, OpenAI lands a multi-year deal with consulting giants in enterprise push. So they had a big deal or a couple of deals out here. So they had one with Frontier Alliances, with Accenture, Boston Consulting Group, Capgemini, I never even heard of them, and McKinsey. Okay, these are huge accounting firms. So they're pushing their OpenAI onto them to use OpenAI more and more. There's a kind of a really crazy company out there that will pay you if you're a subject matter expert in something. Let's say it's accounting. They will actually pay you to train their language learning models. So this is what I see is happening right now. You have a company like OpenAI that's partnering with these companies and say, hey, use our AI as much as possible. But what do you think they're doing in the background? They're learning how these accounting firms work so that eventually the artificial intelligence companies, these OpenAIs and the Anthropics of the world, they can have agentic AI, they can have these agents just do whatever those consultants were doing, right? At a fraction of the cost. These consultants are not cheap either. I mean, per employee, you're talking 150, maybe even 100K, for yearly salary, health benefits, 401ks, all that stuff. But now you can have a $20 agentic AI model just do it all for you, right? So it's getting really crazy out there. Again, I like to cover this stuff because it's just adding more to the picture of where AI is. So when you hear stupid things out there that says there's an AI bubble and AI is going to go away and there's not demand for AI, absolutely moronic in my personal opinion. All right. People can have their own opinions. I could be totally wrong. Maybe there's no demand for AI in the next 2-3 years, right? And data centers just remain empty. I have no idea, but I'm willing to bet, and I am betting that, there will be a demand for data centers, demand for AI, that the AI thesis is not dead. And as we continue to move on through these years, AI is going to continue to evolve, and it's going to continue impacting the jobs market, right? That's why, again, there's this idea of UBI, universal basic income for everybody, right? Because AI is just going to start replacing a lot of jobs. If you're a McKinsey accounting auditor, right, making $150K a year or something, do you think you really want to work at a McDonald's, no offense, or work at some lower paying job? Even though the jobs are available, doesn't mean that these professionals, people with credentials, are going to want to work there, right? So as AI continues, and I want to say the word proliferate, but I don't know if that's the correct word, but as AI continues to get adopted by the enterprise, by every business, you're going to see that people just don't need such large staff, such large departments of staff, right? And that's going to impact, again, when we talk about this, what can it affect? Well, you look at office REITs, real estate, right? You look at office REITs, that's why they're getting absolutely slaughtered right now, because AI is replacing departments. Companies are not going to hold that office space if they don't need it, right? And then now the office sits vacant. So what a lot of office REITs are doing, or a lot of offices are doing, is they're repurposing their offices for living spaces, because everyone needs a place to live, period, right? Everyone's always going to need a spot to live. So just getting way out there. I know it's a little conspiratorial, but just wanted to cover that piece. So I see we have Fruit in the chat. Hey, welcome. All right. So Amazon to spend $12 billion in Louisiana on AI data centers. This is big news, right? We keep talking about, the data centers and, the locales fighting, companies like Amazon in order to not build data centers, because it's going to increase the cost of electricity. And actually, I didn't stop to think about this, but the demand for water, right? The demand for water will also be there, and it could impact, just local everyday residents that live in these areas where data centers are being popped up, right? I'm going to just cover this little small piece, but Amazon announced earlier this month that it expects to invest $200 billion in capital expenditures this year in 2026, more than any of the other hyperscalers, which combined have forecast nearly $700 billion in 2026 expenditures. Wall Street has viewed Amazon's CapEx plan skeptically, as shares sank for 9 straight days following its February 5th earnings report. The slide shaved more than $450 billion off its market value. Most of Amazon's spending is expected to go into AI-related initiatives, including data centers, chips, and networking equipment. So again, when you're looking at the second, third, fourth, fifth derivatives, or layers, you start looking at like the Microns, you start looking at the Ciscos, or you start looking at maybe a pure play data center like a CoreWeave, right? It's getting crazy out there. Like, there's so much money getting poured into AI, and I keep talking about AI on the stream. I know some people are probably sick of it, but that is basically what I'm basing a lot of my portfolio off of, is the AI trade, right? Debasement trade, AI trade, the super government super cycle, right? The Ethereum super cycle. I mean, this is basically what covers my portfolio. So this is why I cover this a lot, right? But I'm sure people are getting bored of me repeating the same stuff. But anyways, I digress. The rapid build out of AI data centers by tech companies has also been met with some pushback in local communities where the facilities are based. Residents have argued that data centers can be a drain on electricity and water resources and negatively impact quality of life. Microsoft last year walked away from a planned site in rural Wisconsin after residents raised environmental and financial concerns. I was watching this video down here. Let me put a link in the chat in case you guys want to see it. But I was watching it. It was getting really good, but I wanted to get ready for the stream. It's only about 17 minutes. I really recommend people take a look at this video and kind of see what goes into a data center, like how much power, how much forecasting, how much thought, how much construction goes into a simple data center, and see what the server farm actually looks like, because these server farms are immense. And then when you start thinking in layers, right? You're going to have the software stack, right? For this particular data center for Amazon, they're only using their Trainium chips, right? But go layer down, right? If they're building out these other data centers, I mean, who are they going to be using, right? AMD, Nvidia, the usual suspects. Then you look down a layer below that, you're going to have, the power, which companies are going to be powering these data centers. There's always this thought about nuclear coming out, nuclear facilities opening, this and that. Move on below or even further than that, and you get into the miners, right? You're going to need a lot of copper to wire up these data centers, right? And there's not a whole lot of copper. So again, something to consider in your thesis is whenever you're thinking about these metals, commodities, or these companies, right? Who's benefiting from this AI trade? So Farouk says this is all headed to free energy that we already have in the ether. It's all around us. Yeah, sunlight, but sunlight is only good for a couple hours a day. And then you have, of course, wind, but that is unreliable. Powering these data centers, and I kind of understand where you're going with that, Farouk. Appreciate the comment, but when you're looking at what is a reliable power source, these data centers are going to be taking up gigawatts. That's basically powering small cities. And they're going to need a lot of freaking power for these data centers, right? And one data center, they measure the data center demand in megawatts, right? So you see numbers being thrown out there: 250 megawatt data center, 500 megawatt demand. You hear 1 gigawatt, GW. You hear one being thrown around, and that's basically a full city that you're powering, right? All right, so we're pretty much getting on with the hour, and I am going to try to breeze through these last couple of slides real fast. This is just a quick 4-minute clip from Blockstream's CEO Adam Beck on the Bitcoin downturn. All right, so let's just listen in.
Exclusive from the iConnections conference in Miami Beach is Adam Back. He's the co-founder and CEO of Blockstream and known for inventing Hashcash, the system that became the foundation for Bitcoin mining. Adam, great to have you with us.
Well, thanks for having me on.
I want to get your take on what's gone on with Bitcoin. It seems like all of the right things are happening for the Bitcoin story in terms of the legislative sort of arena, the regulatory environment seems to be good for Bitcoin. The investment case is good for Bitcoin in terms of institutional investors coming in. There are all sorts of products tied to Bitcoin. Why is it down so much?
Okay, it's generally been off based on geopolitical uncertainty and news flow about tariffs and things like that. So Bitcoin has followed that. I think in the short term, Bitcoin follows along. In the long term, it's decorrelated, basically. So I think it's just a longer term view.
Blockstream is a treasury company, correct?
BSTR, Bitcoin Standard Treasury, is a treasury company coming up for SPAC approval. We estimate about April. And depending on where the Bitcoin price is, if it holds at this level, that's actually to our advantage because we go out with a lower reference price.
Just real quick, anytime I hear a company going through a SPAC, I immediately just don't even bother. Like, SPACs were all the rage. If you guys remember back in 2021, if I'm not mistaken, or 2020, you have Chamath that was like dropping them like left and right. SoFi is the child of a SPAC. But yeah, a lot of SPACs were basically pump and dumps. A lot of them, right? A lot of SPACs were pump and dumps. Not something I'd get involved with personally, but if you're interested in SPACs and you're interested in another treasury company, then maybe something like this could be of interest.
And are able to buy more Bitcoin, making our way up the rung to probably number 3.
Burgeoning area in terms of how many have come onto the market recently and the decline in Bitcoin prices. Is there any correlation? It seems like that element of the story is a little bit different in terms of the decline that we're seeing this time around.
No, I mean, I think they are generally supportive for the Bitcoin price because for the most part, they try to hold, buy and accumulate as MicroStrategy started some years ago now. And so they're effectively taking Bitcoin off the market. They're generally able to do that in more bullish environments faster. But, even today, they're buying Bitcoin.
But even with all these treasury companies buying Bitcoin, you have these holders that should theoretically provide much more of a floor. Do you think that it does provide more of a floor for Bitcoin as we see prices decline?
I mean, I think Bitcoin tends to be a little weak to the downside because many of the retail investors end up being all in. And so they don't have a lot of capital to buy Bitcoin. Whereas if you look at public company stocks or big mutual funds looking at analyst reports, if they see the price of something come down, they might sell some Microsoft and buy some Tesla if they think Tesla's cheap at a given level. With Bitcoin, most of the investors are all in, so they don't have that ability to sell something else to reallocate. With more institutional investors coming in, I think you see more of that reallocation between other asset classes, but it also can bring with it some correlation short term.
There's also...
So you guys heard that, right? That I thought that was an interesting point. He's saying that, most Bitcoiners, like they're just all in on Bitcoin, right? They don't have to worry about earnings. They don't have to worry about, negative news press releases or positive press releases or circular financing or any of that nonsense, right? So most Bitcoiners are just all in. But with the institutions starting to step in now, right? You have BlackRock, you have Morgan Stanley, you have some of these other banks, that are allowing you to take collateral on your Bitcoin. You also have an aging, group of Bitcoiners who are reaching that age where they need mortgages, right? And you can't do anything with Bitcoin. It produces literally no money, right? No dividend, no nothing, right? So they have to sell the Bitcoin in order to buy, a house or mortgage, a car, whatever. But he's also saying that as those Bitcoiners start to move out, right, and you have the institutions moving in to buy up everything, that is creating that correlation.
The new element of being able to bet on the direction of Bitcoin in many different ways, whether it be in the futures market or now the predictions markets. I mean, on Polymarket, you could bet on the direction of Bitcoin in every 5 minutes. And I'm wondering if that, you think, plays a role in terms of sapping away that retail, even the incremental retail trade away from actual Bitcoin to other sort of devices and instruments.
I mean, there has been some discussion about so-called paper Bitcoin in derivatives, but I think it's mostly arbitraged out so that there's very little effects from paper in Bitcoin. Like in gold, there's a lot of synthetic gold. In Bitcoin, it's either physical or there's side contracts, and there's very few people that are long-term short Bitcoin. So most of the Bitcoin that's margin long in like CME futures, there are people doing basis trades who are buying physical Bitcoin to hedge. So I think it mostly offsets actually.
So there we go. All right. Why Bitcoin is doing what Bitcoin does. Again, I still think that we have some further downside. If you're joining in on the stream, I had mentioned that I think we're probably going to be hitting the mid 50s, maybe 55 to 58. At least that's where I hope, because that's where I'm going to initiate another big buy of IBIT. So I buy IBIT. I don't buy Bitcoin, just because I like to keep it all in one portfolio. I don't care. I don't want to deal with all these wallets and all this hoopla about cold storage, hot storage, keys and phrases, all that other garbage. I'd rather not deal with it. Okay. Broadcom is noted as best in class for the ASIC market, but Marvell, Qualcomm are catching up. I'm not going to go in depth with this article from Evercore. So Evercore ISI, they usually do, they offer an opinion piece, and I wanted to read it real quick. But Broadcom, net of it is that Broadcom is doing the best, right? We saw Marvell have a really sharp sell-off. They haven't really recovered. We also see, ARM and Qualcomm not really doing much this year. TSM has actually been on a rip this entire, basically for the last year, they've been on a big rip. So it's really been between AVGO, Broadcom, and TSM. Let me see if I can show you guys this quick comparison chart. So I gotta change screens here. Let's see if I could do this. Let's see. So we're going to remove that. We're going to add, let's see. Man, I should have just added this thing in the beginning. Okay, there we go. Add to say. So I just wanted to show you guys this real fast. But you have Broadcom just absolutely crushing it over the last year, right? Broadcom has just been crushing it. Meanwhile, you're having Qualcomm, ARM, and Marvell just going down, right? Not doing really well, not being hot in the space. You had Qualcomm; they are coming out with an AI chip for cell phones. I think they had a deal or a partnership with Apple, but TSM again. You can't have semiconductors without TSM, and TSM has been on an absolute rip. So. I see Skeptic mentioned something. I'm not gonna even go into that, man. You're treading it, man. You're trying to get me deplatformed over here. But anyways, I wanted to show this, guys, in case anyone has been bullish on any of these stocks in the past. I've been pretty bullish. I don't own a position in Broadcom because I already have exposure to Nvidia. So I didn't really want to open another semiconductor position, but I've always been bullish on Broadcom. Marvell, not so much, or Marvell, not so much. ARM, British company or United Kingdom company. Again, they do a lot of mobile CPUs or mobile chips. Qualcomm's the same. TSM, obviously. I mean, how could you not be bullish on TSM? I mean, they're moving their whole factory from Taiwan to America. And, obviously it's a bargaining chip, because they could take that off the United States could take that off the chessboard in case China was to invade, Taiwan, right? TSM just didn't wake up one morning and say, where we're going to move our chip manufacturing company to? We're going to move it to America, right? They didn't do that. This was all planned previously under the Biden administration, right? That this was something that they should do because, again, the United States is fearful of this supply chain getting disrupted and disrupting basically the entire semiconductor sector, right? That would not be good. All right. So we covered that. I think I'm pretty much over, guys. I think I'm pretty much covered everything I wanted to cover. Whoops. We covered quite a bit. Let me just see if that's the last of the last. Let me make sure this is turned on and we'll share. Boom. All right. So just to kind of summarize everything, or not summarize everything, but to kind of go over our positions, because I haven't covered this in a minute. This is our Discord community challenge. Okay, so we have a couple entrants here. Again, the whole idea was to build a portfolio with a hypothetical 100,000. You could choose individual stocks, spot price ETFs, commodity ETFs like IBIT or GLD, no leverage ETFs, no index-based ETFs, no income ETFs, no dividend-paying ETFs, no broad-based ETFs, right? It has to be single stock. So you actually had to have some type of conviction or at least idea in what you wanted to invest in, right? So this is the leaderboard right now. I'm obviously down the most. So yay me. I have a lot of high conviction names like, one is IBIT, of course. I think I have BMNR, MSTR in there as well. So of course I'm down the most, right? But we see that Citizen of the Year, another YouTuber out there, he went all in on Micron, MU, ticker MU, and he's really the only one that's past 100. So pretty much no one's went anywhere except for Citizen of the Year. He's up, just almost $1,500. All right. We have Serial Beggar in the chat, and I know I saw him earlier. At least I believe I did. And he basically spelled out his entire name using tickers. So this is a meme portfolio, and he's actually doing better than people who selectively chose their stocks. So maybe investing is not that difficult. Maybe you just YOLO your money into your namesake. And then you do very well, right? This is reminiscent of like that 2018, 2019 thing where it was like, you had like Graham Stephan, I think, that had like a chicken choose a bunch of stocks or his cat or dog or something. You had like an animal just choosing stocks and the stocks did fairly okay, right? Like this is absolutely crazy. Pay Me in Dividends, another YouTuber out there. He had Netflix, Reddit, Coke, and DTref, which is a mining company or a miner. And he looks like he's doing pretty well, actually. Not too bad here. All right, Netflix, Reddit, not doing hot, but Coke and DTref is doing very well. Of course, you have the Victor Crooks, who's the commodities guy, and he's been crushing it, been recovering. I don't know what his total gain is. Again, ATCX just does not seem to want to populate, but I would probably assume that he would probably be above 100K if I had to guess. So hopefully Seeking Alpha will fix that later on. We also have Dividend Rocket, he chose, let's see, UNH, Micron, BMNR, SanDisk, Crowd, Costco, Amcor, ANET, and Goldman Sachs and Google. So he's actually not doing too bad either. Yeah, he's not doing too bad either. All right, his portfolio down about 6,000. All right, I'm down much more. So Theta Decay. All right, also we have him in the chat from time to time. He looks like he's doing all right. Still a lot of software names. All right, software is getting sold off. And then we have Velocity Portfolio. Rob, if shout out to you, but he also put in for this challenge. And again, the cash prize for winning this challenge is going to be 1,000 USDC, which is basically $1,000. Unless USDC crashes and then, you know, that USDC becomes zero, then hey, I can't control that. But yeah, it looks like his portfolio is not doing too bad either. I mean, well, it is doing bad, but I mean, all of ours are doing bad except for Serial Beggar, which seems to be doing well. We have Rocket Lab that's down. JP Morgan, they got slaughtered. Let's see what else we have here. And we have Palantir that is also down as well, right? Software names are not doing too high. And that was just for the gains. That was just for today's gain. So, yep, we have Evil Duck. Unfortunately, his just will not populate. I have no idea. I think it's this Canadian company right here that's screwing up the numbers somehow. But I know his portfolio has to be doing pretty decently. I mean, he's up by a lot. I mean, I don't know. It's just Seeking Alpha is being kind of dumb. Super Straight Guy, if you're still here in the chat, let's see. We have gold. Gold is obviously doing well. We covered gold earlier. Costco doing well. JP Morgan, IBIT, Amazon, these are all down, right? Oh my God, which one's this? Oh, this is CrowdStrike. Yeah, CrowdStrike down 10% on the day because of the whole Anthropic news that we covered earlier. MSTR, of course it's down because as Bitcoin goes down, so is MSTR, right? But for Super Straight Guy, you're at $94,000, right? So we'll see how this challenge continues. Again, we're only in the second month. We're pretty much at the end of the second month. We closed this this challenge January 31st. So we'll just let these ride out for the rest of 2026 and then see who's the winner at the end of the year, right? See who has the best portfolio or who has the most gains, right? So again, we started with 100K. And you can already see who's taking the biggest losses, right? Me, pretty much. But hey, I'm bullish on Bitcoin, and I think BMNR and MSTR will recover and have these really crazy run-ups later this year. So we just have to make it to when the Federal Reserve gets that change out. And if we start hearing language out there that starts to say quantitative easing, money printing, the big print, right? We're going to inject money into banks. We're going to expand the balance sheet, expand the Fed's balance sheet. If we start hearing this type of stuff, that's when I know that we are heading for quantitative easing. So, well, ladies and gentlemen, that'll do it for me. I appreciate you guys joining me on this stream. All right, and listening to me yap on about nonsense throughout this whole thing. All right, and of course, I know you guys are all tired of winning. Because I certainly am. I'm hoping that we could stop winning for a little while and just maybe go green. But with that being said, guys, I appreciate you guys joining me on the stream. As always, make sure you hit that like button. I do appreciate it. And I will see you guys in the next stream. You guys have a wonderful evening, a wonderful afternoon or day, wherever you are in the world. And with that, I will see you guys later. Take care.